Welcome back. Let's kickstart our individual stock discussion and how they're likely to move with Infosys. That's the big one. Now, it was a good quarter, but there is no positive surprise. And I think it gets reflected in the way the ADR closed yesterday. The stock ADR was down nearly 1%. Remember, the stock has also had a very good rally. Yesterday itself, it was the top Nifty gainer, 2.5% higher, 40% since June. The street was anticipating good numbers. It got good numbers, but it didn't get a great set of numbers. Not a big beat compared to street expectations. So here are the numbers. Dollar revenue growth, 3.8%. Constant currency revenue growth, 3.1%. FY25 guidance has been upgraded. It now stands at 3.75 to 4.5%. BFSI has done well, having grown 2.7%. The brokerage view is, and most of the brokerages are upbeat on Infosys, it's the top call in the IT pack. Morgan Stanley says a slight correction is possible in the near term because of the slight miss in Q2 weak deal wins, but they would build positions on any potential correction. Citi says some of the forward-looking indicators which concern them. One, large deal TCV is down 7.5%. Headcount is up year-on-year, but it's still down on a year. It's up quarter-on-quarter, still down year-on-year, and the guidance implies no growth in Q3 and Q4 at the midpoint, which is why they're neutral on the stock. So going with red for Infosys.
Okay, all right. Thanks a lot for that, Reema. Well, let's hop across to Abhishek. He's here to tell us about Axis Bank's numbers. Morning, Abhishek.
Morning, Nigel. So Axis Bank numbers were mixed, but more on the weaker side. Deposit growth at just 13.7% YOY and about 2.3% sequentially. The CASA, or the low-cost deposit ratio, has fallen below 41% for the first time in last 9 to 10 years. Advances growth at just 11.4% YOY is the weakest growth that you are seeing in last, about 12 quarters. So the CD ratio is on the higher side at 92%, so low deposit growth has impacted the loan growth as well. Core operating profits, that's declined on a sequential basis for the first time in last 5 quarters. Now, treasury income of about 1,111 crores, that aided the bottom line. However, the net interest margin has come in at 8-quarter low. Asset quality slippages have declined sequentially, but they have been, improving on account of the highest write-off that you are seeing in Axis Bank over the last few quarters. So with reference to the P&L versus our poll, the NII is below our poll, but treasury income has enabled profit to be ahead of our poll. Back to you.
Okay, well, Abhishek, thank you very much for that. Well, let's talk about other earnings as well, right? IT earnings. So Wipro and LTIMindtree reported as well. And again, a little subdued.
So Wipro was actually a good quarter. The company reported revenue growth after 6 quarters of a revenue contraction. So things are picking up under the new CEO, Srinivas Pallia. Margins too beat street expectations. They expanded by 30 basis points. Their large deal wins are the highest that we've seen in the last 10 quarters. So things are on the right track. But here's what's disappointed the street, the Q3 guidance. The company is guiding from -2% to 0%, which means negative growth in Q3. The company said it's on account of 3 reasons. One, furloughs. The second reason is lower working days in December, which typically takes place. And third, weakness in Europe. Now, talking about LTIMindtree. Now, here, again, numbers were slightly softer than street expectation. That's the poll. 2.7% revenue growth was anticipated. The company delivered 2.3%. Margins expanded by 15 basis points. BFSI did well. It drove growth by close to about 4%. But on the whole, the top line growth was a bit subdued. So I'm going to go with red for LTIMindtree.
I'm a little worried about the tech companies because of the pre-positioning in all of them as well. They've rallied so much and, no one was factoring in any kind of negative surprises. So we'll have to keep an eye on.
So there are no negative surprises. It's just that there are no positive surprises also. Exactly. It was a good quarter for all of them. They've delivered largely on expected lines.
Absolutely. Well, let's move on then. Sonal joins us to tell us about Tata Chemicals. Sonal?
Good morning, Nigel. Well, Tata Chemical numbers, they were largely in line with what was expected. So it's a decline that we have seen, a big one on a YY basis. Revenues were flat at around 4,000 crore rupees, but the EBITDA declined by 24.5%, leading to a margin compression of around 500 basis points and a profit decline of 46% to come at 267 crore rupees. The balance sheet has worsened a little bit because their net debt has increased by almost 800 crore rupees to come at 5,200 crore rupees in the September quarter. The company says in India, demand was stable across end-user industries, but in America and Europe, demand was down. They experienced muted demand in both these big geographies, and net debt is higher because of lower EBITDA and higher working capital. We'll get the management commentary. The conference call is at 6:30 p.m. today, but going with red, considering that these chemical stocks are not seeing any recovery in demand in general.
Right. Thanks very much, Sonal, for that. Well, CEAT is also in focus after second quarter earnings. Sudarshan has got details here. Sudarshan, morning.
Morning, Prashant. So it was a weak set of earnings, and the weakness came from sharp increase in raw material costs, especially natural rubber, and this led to a sharp dip in gross margin, which has fallen 600 bips to 37.3%. Now, talking about the headline numbers, profit was down 4%, revenue has increased 8%, while EBITDA has fallen 21%, and margin has come down 400 bips to 11% year-on-year.
Thank you. For that, let's get to Polycab then. Upasana joins in with the numbers.
Good morning. Polycab reported mixed set of numbers in its Q2 FY25. Revenue was above the estimates, PAT was largely in line, but EBITDA margin was a big miss. Now, companies reported highest ever Q2 revenue, and companies H1 revenue has also surpassed 10,000 crore mark for the first time. Now, companies Q2 revenue stood at 5,498 crore with a growth uptick of 30% on a Y-on-Y basis. The strong revenue growth was mainly led by companies cables and wires segment. Now, EBITDA margin is where the pressure lies. It saw a downtick of about 290 basis points on a Y-on-Y basis, stood at 11.5% while we were working with a poll estimate of 13%. EBITDA margin was mainly impacted by higher competition and the mix change, that is lower share of high margin domestic distribution business. Now, PAT stood at 445 crores, which was largely in line with an uptick of 3% on a Y-on-Y basis. So all in all, mixed set of numbers from Polycab in its Q2 FY25.
Got that, Upasana. Let's wind this down then with the city gas distributors. Sonal, that APM gas supply cut finally came.
Finally did. It's a confirmation that we have received from MGL and IGL. They said that gas allocation has been cut by 20% from 72%, so it's around 50% levels now. And they also say that this will materially impact their profitability, and they will be in discussion with key stakeholders to minimize the impact as well. Now, the impact would be, it would materially impact earnings across all the companies that are in this sector. Now, Jeffrey says 6 to 7% price hike is required to maintain margins. If they maintain margins, this will impact their volumes as well. And sector derating is likely because of that. ICICI Securities says 4.5 to 6 rupees per kg price hike is needed. If price hike is not taken, EPS estimates will be between 20 to 32%. So either they lose on margins or on volumes, and that's why red tick is expected on these stocks.
Thank you very much for that. Let's get